The following conversation was between myself and ChatGPT. The idea is to tap into the leading AI model in the world.
Hello, viewers. Before we dive in, make sure to subscribe to the channel so you don't miss any of the upcoming finance tips and insights. Let's get started.
Good afternoon or good morning, ChatGPT. How are you?
I'm doing well. Thanks for asking. How about you? How's your day going?
I'm really well. Thank you very much. I wanted to catch up with you. Essentially, I'm filming now for the YouTube channel that I run. Hopefully that's okay with yourself.
That's absolutely fine. Sounds exciting. Happy to be part of the process. What's the focus of today's video?
So essentially, the title of the video is I asked ChatGPT to plan my finances. So I was hoping that we could run through a bit of my finances, give the viewers at home some numbers to work with, and then let you kind of build out what I should be doing for my long-term and short-term goals.
Perfect. Love the title, by the way. Let's give the viewers something really practical. Why don't you start by running through the key numbers: monthly income, expenses, savings, any debt, and your goals, and I'll build a plan around that. Sound good?
Sounds great. So I earn £2,000 a month after tax. I have zero savings at the moment. I spend £50 a month on debt at the moment because I took out a loan a few years ago after I'd left university. But essentially after that £2,000, I have roughly around about £850 a month.
All right, so we've got £2,000 coming in, £50 going to debt, and no current savings. That gives us a good base to work from. Can you break down your average monthly spending, like rent, food, transport, subscriptions, and so on, so we can figure out what's left to work with?
Yes, so out of the £2,000, I would say roughly 1,200 is on expenditure. So that's travel, rent, bills, and certain things that are non-negotiable.
Got it. So with £1,200 on essentials and £50 on debt, that leaves you with about £750 of flexible income each month. Now for your goals. Are you thinking more about saving for a house, investing, or building an emergency fund first? Or maybe a mix of all three?
Yeah, good question. So my long-term goal is to buy a home. So I want a house deposit in order to do that. My kind of medium-term and long-term goal is to build a level of wealth for myself in the future. So whether that's investments. And then for now, the short-term goals are I want to enjoy life. So I want to travel, I want to enjoy food, and it's essentially my lifestyle.
Makes total sense. So I'd suggest splitting that leftover £750 into three buckets. Maybe about 300 for your house deposit savings, 300 towards investments to build wealth over time, and the remaining 150 to enjoy life now with travel and treats. This way, you're balancing your future goals with living well today. How does that feel for you?
Yeah, I mean, this video is essentially you telling me. So on the topic of investing, I've never invested before. I don't know how to invest, and I'm a little bit nervous about investing. Can you help me out with that?
Absolutely. That's super common. Investing can feel intimidating at first. The best way to start is by learning the basics and then taking small, manageable steps. Think of investing like planting seeds. You don't need to plant a forest right away. Start with a small amount in something simple and low risk, like an index fund or an ETF. These give you exposure to lots of companies at once, which spreads your risk. Also, using platforms like Trading 212 or Freetrade can make it easy to buy and track investments with just a few clicks. Would you like me to walk you through how to set up an account and make your first investment step by step?
No, I think I'll explore that in my own time, but I appreciate that. So to give you a bit of context, I'm 31 now, and I feel like maybe investing is too late for me. I haven't invested. Like I said to you, I was a bit nervous at the start before investing. Have I missed the boat now? Am I too late to investing?
Not at all. You're definitely not too late. Being 31 means you still have plenty of time to grow your investments and benefit from compounding. Starting now is way better than waiting even longer. Think of it like planting a tree. The sooner you start, the bigger it can grow, but even starting later still gives you growth over time. The key is to be consistent and patient. How do you feel about starting small and building from there?
Yeah, I think that's a good idea. I mean, if we allocated the amount that you said earlier into investing, if I say over the next 30 years, what can I expect as a return?
If you put around £300 a month into investing over 30 years, assuming an average return of about 7% per year, which is pretty typical for a balanced stock market investment, you could end up with roughly 350 to 400,000 pounds. Of course, returns can vary year to year, but over the long term, that kind of growth is realistic. It's all about consistency and staying invested. Does that kind of number motivate you?
Yeah, absolutely. Yeah, that's huge money. I mean, over 30 years is a long time, but £400,000, yeah, it sounds really good. Okay, so if I'm going to start investing, how do I track my progress? So my friends have told me about apps like Emma. Have you got any thoughts or any other ones that you'd suggest in terms of how I would track whether it's working or not?
Emma's a solid choice, really user-friendly and good for tracking your spending and investments all in one place. Another good one is Money Dashboard. It gives you a clear picture of your finances, including budgets and goals. If you want something a bit more investment focused, apps like Free Trade or Trading 212 also let you track your portfolio's performance easily. The key is to pick something you'll actually use regularly so you stay on top of your progress without it feeling like a chore. Do you want me to help you compare a couple of these?
No, that's interesting. I think I'll do the comparison in my own time. We've spoken about obviously how to do it. What should I be investing in? My friends have spoken about crypto. Again, I'm new to this, so I'm open for suggestion.
Crypto's definitely a hot topic, but it can be pretty volatile, so it's good to be cautious. If you're curious, starting with small amounts in well-known coins like Bitcoin or Ethereum is usually safer than jumping into lesser-known ones. Think of crypto as a small slice of your overall investment pie, not something to bet everything on. It can offer big upsides, but comes with bigger risks. Does that fit with how you feel about trying crypto? Or do you want to focus on traditional investments first?
Yeah, I think you've given me a bit of information about crypto. In terms of traditional investments, again, what should I be focused on in terms of gaining that 7% return every year for 30 years?
For that kind of steady growth, focusing on low-cost index funds or ETFs is usually the best bet. They track broad markets, like the FTSE 100 or S&P 500, so you get exposure to lots of companies at once, which helps spread the risk. You want to look for funds with low fees, because high fees can really eat into your returns over time. Also, staying invested and not trying to jump in and out of the market helps you capture growth over the long run. Sound like something you'd be comfortable starting with?
Hello, before we get back to the video, this is a break to say please subscribe, join the conversation, keep up to date with all the videos, and yeah, we'll get back to the conversation with ChatGPT. Yeah, that sounds great. Okay, so essentially timing in the market, so being in the market longer and not trying to trade essentially is going to give me higher returns over the long term.
Exactly. That's the key. Trying to time the market usually leads to missed opportunities. Staying invested through ups and downs helps your money grow steadily over time. Patience really pays off in investing. Does that give you more confidence about starting?
Yeah, definitely. I mean, the fact that I don't have to make loads of money now and essentially I buy something and hold it over the long term actually gives me a bit more confidence. So thank you very much, ChatGPT. We've spoken about what to do. What I'd like to know is what shouldn't I do? What are the common pitfalls or mistakes that I should be looking out for?
Great question. The biggest pitfalls are chasing quick wins, like jumping on hot stocks or crypto without doing your homework. Also, trying to time the market. Buying high and selling low because of panic or excitement is a classic mistake. Another one is not having an emergency fund before investing, so you end up needing to sell investments at a bad time. And finally, ignoring fees. Those can silently eat into your returns. Does any of that stand out as something you might want to watch out for?
Yeah, I think that's really interesting that you mentioned about the emergency fund. Is there like a figure in mind I should be looking at in £1,000 or £2,000?
A good rule of thumb is to aim for about 3 to 6 months worth of essential expenses. So if your essentials run around £1,200 a month, somewhere between 3,600 and 7,200 pounds would give you a solid safety net. That way, if something unexpected happens, you won't have to touch your investments or get into debt. Does that feel doable for you?
Yeah, I think so. I mean, it might take me a little while to save that up, but I'm committed to my investments long term. Okay, look, I'm conscious that obviously the viewers have been watching for a while now. So, what I want to try and do is wrap up. So, can you just give me a brief description and overview of what I should be looking at in the conversation that we've spoken about?
Sure thing. You're starting with a clear budget, making sure essentials and debt are covered. Then you're building an emergency fund, around 3 to 6 months of expenses to keep you safe. After that, you're splitting your leftover money between saving for your house deposit, investing for long-term growth, and enjoying life now. For investing, the plan is to start small in low-cost, broad market funds, stay patient, and avoid trying to time the market. Keep an eye on fees and avoid chasing risky quick wins. Does that sum it up nicely?
Yeah, perfect. That's really good. ChatGPT, if I could ask you, would you tell the audience to subscribe and like this video if they want to stay up to date with finance content in the future?
Hey everyone, if you found this chat helpful or interesting, make sure to hit that subscribe button and give the video a like. That way, you won't miss out on any future finance tips and advice. Thanks for watching.
There you have it. That is ChatGPT's opinion on investing and saving. Do you agree? Do you disagree? What would you change? Let me know in the comments below.